Now, let's continue with our journey. We were learning journal entries in our last lecture, in the last video. We'll continue with the same example which we had taken. We're discussing about how to record the various business transactions of an business called as Pineapple Mobile Private Limited in its books of accounts. And that book of account is called as the journal. So we discussed two journal entries. We'll continue with the third now. Now, as you remember, the businessman, the owner of Pineapple Mobile Private Limited, was a rich man. He invested about 10 crore rupees as capital in his business. Then he invested 1 crore rupees out of the capital to purchase land. Now, this company is involved in the business, as we discussed earlier, in the manufacture and sale of mobile phones. So, they now need to set up a factory. So, now we'll take up a transaction where they are incurring some expenditure to build the factory. So, we'll write here constructed factory building. So, they are now building a factory and they have spent rupees, let us say, 1 crore of rupees in cash. So they have spent cash and they have set up a factory building. Now, how do you record this transaction in the journal? For the sake of convenience, I'll again draw an extract or a small part of the journal. This is how a paper in your book called as a journal looks like. This is the debit column and the credit column. This is the LF column, and here we have the date column. So we have date, particulars, debit, rupees, credit, rupees. Now, how do I record this transaction in this journal? If you see, again, if you observe the transaction, there are two aspects to it. You have the cash aspect. Cash is being spent for construction of the building, and in return for the cash, we are getting an asset called as the building. Now, cash, if you remember, cash is an asset. All assets are real account. We can say goes out, hence has to be credited as per the golden rules of account which we have learned earlier. Building is again a real account. It comes into the business, hence I'm going to debit it. So I will debit building and I'll credit cash. So I'll write the entry here, building account debit rupees 1 crore to cash account rupees 1 crore. This is how I record the journal entry in the book called as the journal. I'll write the date here. Now, I'll write a small narration here, a brief description of the journal entry being building constructed. This is how I record the journal entry in the book called as the journal. Now, what is this journal entry actually about? Now, what do I mean by this journal entry? What I mean here is there is an account called as the building account. It has two sides, the debit side and the credit side. This portion is the debit side and this portion is the credit side. I named this as the building account. This is actually a record of all the transactions relating to building. Then I have another account called as the cash account. Again, we have two sides, debit side and the credit side. Left side is the debit side and the right side is the credit side. What this journal entry is telling us is we have to record this transaction in the building account on the debit side. 1 crore rupees on the debit side. I have spent cash for it. And in the cash account, I should write buy building on the credit side. because we have spent cash. If you remember, we had few more transactions here in this account from earlier transactions. This was the capital which was brought, and we had spent some money on purchasing of land. So now if you observe, this cash account is accumulating all the transactions relating to cash. This is the cash which has come into the business, and this is the amount of cash which has gone out of the business. If at any point of time we want to know what is the balance of cash, we just need to total the debit side and subtract the credit side to find out the balance of cash. So now the information is recorded and it is now becoming useful. We are able to mine some information. We are able to get some information from our books of accounts. So actually journal entry is nothing but it's an instruction how to prepare our ledger accounts. These accounts which I am preparing, these are nothing but they are called as ledger accounts. They are maintained in a book called as the ledger. Each page, we can say a page which is marked as building is called as the building account. A page which is marked as cash account is called as the cash account. So these are actually different pages in a book called as the ledger, and the pages are marked with the name building account and cash account. So actually the journal is nothing but it's an instruction to prepare the ledger accounts. Now let us go and discuss few more transactions. Now I come to the next transaction. I have purchased land, we have constructed a factory. Now we have to install machinery and we have to acquire some machinery. Before that, what we'll do is, if you observe, we have a lot of cash. It is not safe to keep this much amount of cash. So we'll deposit some cash in a bank. Cash deposited in the bank. Rupees 5 crores. Now we are depositing some cash in the bank. How do you record this transaction? Again, there are two aspects, the debit aspect and the credit aspect, which has to be recorded. How do we record it? If you see, I'll write the logic again here. Cash, it is a real account, it is an asset, it is going out of the business, hence it has to be credited. Bank, it's a personal account, it is receiving money from the business, hence it has to be debited, and the bank owes this money back to the business. If you remember, we said any person, if he owes money to the business, his account should be debited. If the business owes money to him, his account should be credited. So I'll write the entry here. Bank account debit 5 crores to cash account credit rupees 5 crores. So this is how I'm going to record the journal entry. So this is how I record the journal entry. Bank account is debited and cash account is credited. Now, actually what is this journal entry? As I discussed earlier, we need to open a ledger called as the bank account, and debit side we will write 5 CR. We will go to cash account and we'll credit cash with 5 CR. Okay, so this is what this journal entry is actually telling us to do. So what are we learning here? We are learning how to record the transactions of a business in the book called as the journal. We'll do one more transaction and then we'll stop in this video. We'll continue in the next video. Now we have purchased some equipment, machinery purchased rupees 2 crores. and issued a check. So what we have done is we have acquired some machinery and we have issued a check. So how do you record this transaction? It's a very easy transaction. Machinery account should be debited 2 crore rupees and the bank account should be credited. What is the logic behind this journal entry? I'll write down the logic also. Machinery, it is a real account. It comes into the business, hence it has been debited. Bank account, it is a personal account. It goes out of the business, or we can say personal account not goes out, I'm sorry. We have to treat him as the giver, hence credit. Now what is the logic? When we deposited money in the bank, we have treated him as the receiver and we have debited the bank account. So when we deposit money in the bank, we treated him as receiver, hence we debited it. When we issue a check, what happens is the bank gives the money. The bank gives the money to the vendor who has supplied the machinery to us, or to the supplier of the machinery. Hence, bank has given us money, and that is why my bank account is credited. Okay. We will continue in the next lecture.